Hey everyone, welcome back. If you've been watching SaaS stocks lately, it's been rough. A lot of high quality software companies are down massively from their peaks. And not speculative names, I'm talking about the biggest, most established players in enterprise software. As of mid February 2026, Microsoft, MSFT, is down about 38% from its peak. Salesforce, CRM, is down roughly 44% from its 52-week high. Adobe, Adobe, is down over 60% from its all-time high, and still about 42% down over the past year alone. Intuit, Intu, is down around 50% from its 2025 peak. Those are serious drawdowns. When companies of this quality fall 40 to 60%, it's not noise. The market is repricing something major. And that something is AI. So the question is AI breaking SaaS, or is this a reset that long-term investors should be studying carefully? This is not financial advice, just how I'm personally thinking about it as someone who's worked in tech for years and invests my own capital. The valuation reset is real. Let's talk valuation, because this is where things get interesting. As of mid-February 2026, Microsoft is trading at around 22x forward earnings. Salesforce is roughly 1416x forward earnings. Adobe is about 11x forward earnings. Intuit is near 15x forward earnings. Pause for a second. 2 or 3 years ago, these were 30x, 40x, sometimes 50x plus multiple stocks. Now you're looking at high margin, dominant software platforms trading at mid-teens earnings multiples. That is a dramatic repricing of expectations. The market is clearly saying, growth will slow, margins will be pressured, AI will disrupt. But here's where I think the story gets more nuanced. One, AI doesn't replace data, it amplifies it. Working in tech, one thing becomes obvious over time. The real moat in SaaS isn't the interface. It's the data, the integrations, and the embedded workflows. Microsoft owns enterprise cloud infrastructure and productivity layers. Salesforce owns CRM and customer data. Adobe owns creative workflows and digital content ecosystems. Intuit owns small business and tax financial data. AI models do not magically recreate that. If anything, AI becomes significantly more valuable when paired with proprietary, structured enterprise data. AI without data is impressive. AI with embedded customer workflows is defensible. That's a key distinction I think the market may be overlooking. 2. AI can expand margins. Another thing I don't hear discussed enough. AI dramatically improves internal productivity, code generation, automated testing, customer support bots, sales prospecting, marketing content, internal analytics. If you've worked in software teams, you know engineering and go-to-market costs are huge. If AI increases developer productivity by even 20%, that meaningfully impacts operating margins. SaaS businesses already have high gross margins, often 70 to 80%, so productivity gains can flow directly into free cash flow. The market is focused on revenue disruption. It may be underestimating cost efficiency improvements. Read these multiples already price in fear. Let's be honest. When Adobe trades at 11x forward earnings after a 60% drop, when Salesforce is at 1416x after a 44% decline, when Intuit is at 15x after falling 50%, that is not a market expecting smooth growth. That's a market pricing and structural impairment, and maybe some companies will deserve that. But historically, buying dominant, cash-generating software companies at mid-teens earnings multiples has not been a terrible long-term bet, especially when they still generate real free cash flow. The risks are real. Now, I don't want to sugarcoat this. AI could compress pricing power, shorten software life cycles, enable startups to compete faster, shift value from application layer to infrastructure. Not every SaaS company will survive this shift. Some will lose relevance, and we may see consolidation across the industry. This is not 2021 growth at any price. This is a structural transition period. So, how am I thinking about it? Personally, I'm not panic selling, and I'm not blindly loading up. I'm being selective. When dominant platforms with massive data advantages and recurring revenue streams fall 40 to 60% and trade at 122x forward earnings, I start building watch lists. The key question isn't, will AI change software? Of course it will. The real question is, who is best positioned to integrate AI and strengthen their moat? Because if even a few of these companies successfully layer AI into their existing distribution and data advantage, today's multiples could look very different 5 years from now. Final thoughts. Every major technology shift creates fear. Cloud did. Mobile did. Open source did. AI is no different. The market tends to overshoot both on the upside and the downside. Right now, it feels like we're in the downside overshoot phase for SaaS. Maybe this isn't the bottom. Maybe volatility continues. But when high-quality software businesses are trading at valuations we haven't seen in years, it's at least worth serious attention. Let me know what you think. Is AI an extinction event for SaaS? Or is this a massive reset that long-term investors will look back on as an opportunity? If you found this helpful, like and subscribe, and I'll break down one of these names in detail next. See you in the next one.